Hey everybody, this is Michael with BackToTheFutureTrading.com, and this is another wonderful episode of NinjaTrader Unplugged. Swing! I want to show you a technique today, continuing in our series of using indicators that are in NinjaTrader for free, not paying extra for little indicators here and there that you can already sort of do 98% of the time with tools that are already included with your NinjaTrader. And one of the ones that I'm a big fan of, we at Back to the Future Trading spend a lot of time studying time, and time also has a price component, a support and resistance component, and that goes all the way back to WD Gann. And so one of the things Gann said was that the 50% retracement was the most important retracement when it came to time and price. So I want to set up a couple things with you here and then show you how you can use them with very simple chart application. So right now I want you to see for my data series, I'm using a 3-minute E-mini S&P chart. So if you're setting this up at home, go ahead and do the same thing. You're going to go to your session template under data series and then scroll all the way down to where it says US equities RTH. Okay, and that's great. I'm using again a 3-minute chart with about 30 days loaded here. Now, what I bring up is all of the price action from the open, 9:30, all the way to the close here at 4 o'clock. And that's really important because we're going to do some work here. And once you see these basic operations, you're going to have some really powerful support and resistance levels that are in a very real sense predictive, meaning the market will go there and you'll have a really good sense of what will happen when you get there. So one of the things I want you to take note of, we're going to use the Crosshair Tool. So you're going to go up to this little cursor tool and choose the crosshair. Then go over to your pencil tool and click on Stay in Draw Mode. That'll make it easier for us to keep note of a couple things here. Scroll down to where it says arrow line and then hit OK. And note where the high of the day was and where the low of the day was. See, here at our company and back in the writings of Gann, we don't believe there are accidents in the market, that prices are just sort of randomly arrived at. Everything is meaningful on a chart and it leaves behind clues as to where we're headed next. So now that we have the high and the low, I want to show you something. You're going to go into your Fibonacci retracements tool or hit F8, and then I want you to grab the lowest tick and then grab that highest point that we were just at. Okay, so right up there, and then click OK. And one of the things you'll notice is mine has a default to the 50% fib, but go ahead and double click on it. And then you're going to see I have a preset fib recipe here. And if you want to just pause the video now and duplicate this, all I'm doing is setting the market to minus 100, minus 200, minus 300, 400, 500, and 600%. Okay, so go ahead, pause your video, set those up, and if you want, right-click on your gray background and click Manage Templates. And I save mine as minus 100, 200, 300. So I'm causing the market to, or the fib tool to draw increments of 100% of price action. Okay, so we'll hit OK there. And now if you scrunch it down, take a look at where the price action went to. All right, you see how we did that? So for the next day, remember, before there were any prices here, we had these levels. At the close of every day, you have these 100% levels above and below you. So we could very easily take this, copy it, paste it, and then sort of flip it the other way, right? I could grab the top and then pull it down to the bottom, and then I would have the 100% underneath me as well. So if I flip it back the other way where we had it, I want you to see how we can create that same ladder that we demonstrated in the last video I made for y'all. And so here's what we had. And now I want you to go back and take that 50% retracement that we were using and go ahead and start filling in these blanks. You see what I'm doing here? I'm just grabbing each of the lines and I'm drawing a 50% fib retracement in between each one of the lines. And then I cut it in half again and I make it small again. So each one of these fibs is just the 50%, a 100, and a 0. And I'm extending the lines off to the right. So now here's what's really cool. Once you have that, and you can draw this the night before the market opens in both directions, figure out what size gap is comfortable for you. So here the gaps are from 38.50 to about 42.50. So there's about a 4-point gap. So if you want to see a 2-point gap, you would have to cut everything here in half again. But now watch what happens the very next day. Okay, I want you to see where the market touched and where it bounced and retraced to. It opened at the 100% level, and then it bounced off of 38.50. It bounced off of 42.75. It bounced back off of 38.50. It retarded here and slowed down and reversed at 38.25. Bounced off of 42.75. These were high reaction areas. Now, remember how I said you can control the height of the gap? Once you have your 100% lines, come through and cut them in half again. Now watch what happens when I did that. Do you notice where the additional reaction points were? Again, Gann says over a century and a half ago, there are no accidents. Now look at where the bounces are occurring in relation to that 50% rule that we were just talking about. So just to review, get your plus or minus 100s, then cut it in half, then go back and cut those halves and halves again, cut those halves and halves again, and you're going to find, depending on the size of the trades you're looking for, reliable support and resistance levels. Let me show you what that looks like if we do the same thing for today. Okay, so for yesterday on the 22nd, we had the low of day and the high of day, where I've put those pink arrows again. And then I used that 100% fib 2 times, where I've got minus 100% above us up until the 2 and 3 and 400% ranges. And then I have the minus 100% below us, just duplicating that back and forth. Okay, so I had all that the night before. Now watch this. I'm going to take those zones that we were just looking at, and I'm going to cut them in half. Let's do it over here so you know that this was the day before. So I'll cut these in half, I'll cut these in half, and then I'm going to cut these in half again. Now on the way up, watch. I'll cut it in half again, I'll cut it in half again, I'll cut it in half again. And you notice how we're building a ladder. In my courses, I call this Jacob's ladder. I'm not really good with naming things, but I just want you to see where these lines are coming from. Because again, according to Gann, according to our research, none of what happens in the market is random. We're following this sort of preordained level network and time network. And so all I'm doing is sort of breaking up those 100% gaps from the high and low the day before into smaller and smaller 50%. So now this gap is 55.50 to 58.50. So it's about a 3 or 4 point gap. Now check this out. Look what happens over the course of the price action the next day. Okay, it's buried for today, but I'm going to rezoom it here and just show you what's happening live. Okay, we're all the way at the end. Now I'm going to autofocus. Can you guys see where price is hitting and bouncing? Okay, let's go through and count how many times the market respected those levels that you were just sort of able to draw by hand, right? Places where it stopped at a bar or places where it bounced. Okay, came down, retraced, touched, pushed down, came down, closed under, and so on. You notice how it's using those levels along the way as places where you can almost sort of reliably predict it's going to bounce off of along the way. So that 50% technique using the high and low of the previous day can be super easy to draw and really important in terms of understanding the levels that the market is going to tick down. What do I mean by that? Well, if it's in a downtrend, here's one last rule that we teach about in our course. It's going to hit each one of those lines on the way down. So you can use those lines as down targets in the trend. Let's set it up for tomorrow using the high or low of today, and I'll show you what tomorrow's levels will be. So again, I've noted the high of the day today. I've noted the low of the day tomorrow. We're looking for predictive levels tomorrow that are as or more accurate than anything else that's out there that you have to pay money for. So I'm going to take my fib tool. I'm going to draw a fib from the high of the day to the low of the day today. Then I'm going to double click on it and choose our minus 100, 200, 300 template. And you'll see here that the levels are now underneath me. Okay, I want to put them above me in case the market gaps up tomorrow. So I'm going to copy and paste and redraw that to the upside now. So I'll take it, pick those same levels, but flip them over this way. Okay, and then remember what we did. Now I come back and I use my 50% tool, the one that Gann says and we've observed to be the most important, and I just start pulling lines. Break the pizza up in half, and then break the pizza up in half again. There's no limitation to the size of the gaps in terms of how many times can I cut it. And again, this is all for tomorrow. Cut the gaps in half again, and you've got your ladder network in place for tomorrow before it opens. And this is something you can take 2 or 3 minutes at the end of every market session and draw out. If your stops and targets are 2-point stops and targets, cut your pizza into 2-point stops and target slices. If 4 points is more your gap, leave the gap there. If 16 points are your gap, leave the gap there. But for tomorrow, when that candle opens, I guarantee you more than half of the pivots where the market actually stops and bounces, where you see hanging wicks and 2-bar reversals and dojis, they are all going to occur at the ladder lines that you drew here. Hey, we are sold out for NinjaTrader. We love the guys and gals over there. Love everything about the platform, and we are 100% NinjaTrader certified, sold out loonies for the platform. If you want to tap into the free indicators and templates and workspaces that we create for the NinjaTrader community, just go ahead to backtothefuturetrading.com/unplugged. All we need is your first name and your email. We're going to send you a link to our Dropbox where I store all of the free indicators and templates that I build in these videos, so you don't have to build them from scratch. You just have to load them and take it from there. If you're curious about the shenanigans we're doing over in the website and in our webinars, head over to backtothefuturetrading.com. Go ahead, click on View Demo, and you will see all of the magical things that we're talking about with our software here as well. This has been another episode of NinjaTrader Unplugged. Stay tuned and I'll show you another way to build on the techniques that we're using in this video series, using Gann's 50% rule to find the highs and lows, the turning points of the markets predictively for the upcoming sessions in the markets that you trade. Thanks again, guys. Have a great afternoon and good trading.